But let's go forward and discuss some stock ideas with Prakash Diwan joining in. Prakash, hi and happy Monday to you. I mean, we hope it's going to be a happy Monday after that brutal Friday. What's the sense? I mean, just at a market-wide level, what is your buying list looking like today? Because a lot of the foreign brokers, if you listen to them, they're saying just buy large caps. That's where safety is. Buy big banks. But the tendency usually is for retail to try and pick those mid caps that were out of reach because of high valuations earlier. How are you approaching this market after what we've seen last week?
Good morning, Shruti. So I think it's a bit too early to see any kind of a buying comeback meaningfully within the small caps and mid caps. Of course, the classification of small caps and mid caps is still way beyond the threshold that retail investors like to dabble in. And you could probably call them micro caps or something, which will be less than 2,500, 3,000 crores market cap. That will only happen when you probably have FIs coming back. There's this whole momentum that the market is seized with, so it could take 3 months, 4 months. But I think there's a lot of value picking that's possible. And you're spoiled for choice, actually. But it's just that nobody is willing to commit all the funds at one go because March is expected to also see some bouts of sell-offs, maybe because of tax considerations and, tax loss harvesting or whatever it may be. But I think large banks, private sector banks, particularly the likes of HDFC, Kotak, I mean, they definitely seem to be more resilient than before. What I would avoid is some of the auto names. The M&M has shown very good numbers, but there could still be some time before the revival happens in terms of the mood for these stocks. And look at how the market responds. I mean, you have Ultratech announcing cables and wires foray, and all these stocks, the other stocks got hammered. The reason is even after they actually got hammered, they're still at 60 plus kind of P multiples. So the market is still expensive in certain pockets. So I wouldn't say, I wouldn't dare to kind of start buying into it, but I think defense will start seeing some value buying very selectively. Some of the smaller names which have fallen along with the other big ones. You could have some names in power which could start looking up, but we're still not buying for sure. We would rather wait for another week, 10 days for March to kind of settle in, the month to kind of get it moving. And then remember, earnings will take center stage. So earning expectations will take center stage. So it's going to be a very heady cocktail of global geopolitical this thing and of course domestic news. There's no domestic news flow that's very positive except for the GDP print. But I think the smart money will start coming in probably end March, early April.
Okay. Hi, Prakash. Good morning. In fact, talking about power demand, I had a chat with Mr. Praveer Sinha of Tata Power Fireside Chat at the Forbes event on Friday, and he indicated that power demand is quite good. So that should be indicate that the economy as well is doing pretty okay. That aside, since you briefly mentioned Ultratech, what's your view on the stock? You're getting it 20% cheaper from the 52-week high. They put out clarification on their con call. They're saying that this is a one-off. They're just looking at getting a higher amount of the wallet share of their customer. They're not looking to disrupt the market via pricing. And also, they don't have any more plans to do further diversification. The street will read that positively. Your view on the stock? It ended at the low point of the day, even in Friday's trading session. Post the announcement, I think it's lost close to around 8% of its market capitalization. Your take?
Good morning, Nigel. So you're right. There is concern that the return ratios, the ROCs for the business would for the stock would start getting much more stressed. And remember, the Grasim Opus foray is probably encourage the fact that even Ultratech would get into something which is like an adjacency, which helps them increase wallet share. But it doesn't come so soon. It doesn't come without a lot of investment that will have to go into all this. So there's still some time. When Grasim announced it paid foray, it took them 2 years to really start coming into the market and making a difference. So I think it's going to be a while before that happens. So I wouldn't be overtly worried. It's about what kind of investment they make into the production side, the operation side. That will probably decide. But Ultratech, on a standalone cement, focused business, is definitely poised for a very good, run going ahead. And so are some of the other names also. I mean, you look at the news flow in Dalmia. After a long time, they talked about expansion, and especially in pockets where they otherwise were not very significantly large. So it's going to be a lot of availability of opportunities in cement. I think cement is one of the cyclical sectors which will start doing well, but I would still look at something like a Dalmia Bharat given the fact that it's also consolidated. Whatever had to happen has happened.
Right.
And you could kind of continue growing from here.
So Dalmia would be your preference from the cement pack, right?
That's right. Yeah.
Okay, and diversification, as you said, they look at a new market, which is good. But since we were on the topic of cables and wires, a lot of people believe that post the fall that we saw on Polycab, KEI, Havells, it could actually be a buying opportunity post the commentary of what we heard from Ultratech. Do you think the same? Because paints and cables and wires, as per what industry experts say, is very, very different. Whether you look at the fragmentation of the market, over here there were just a few players that had bulk of the market share. Would you think so? Do you like any of them?
Yeah, so that's a very important point you made, that cables and wires actually don't have, paints doesn't have any unorganized play, whereas cables and wires, there's a lot of fragmentation on the lower end. And there is room for somebody else to come and get, into the organized segment and increase market presence. But the concern is, as I said, KEI, Polycab, Diamond, all of them are still trading at multiples which are 60 plus. So it's something where, we actually accorded them high multiples because of the kind of growth that they have. But the margins and growth rates could probably taper a bit organically. It's got nothing to do with Ultratech's presence. And at 60 times, you're probably priced to perfection. So that's where a bit of a concern is. So I would wait for some softer valuations if I had to look at the other names that you mentioned.
One is with us, and we've been talking specific stocks, cement, wires and cables, etc. Prakash, rapid fire. Let's go back and forth on a few things. One is IT services. The IT index, after not falling, fell 10% in the last 7 days. I reckon that was on US growth fears. Because over the last 1 week, US markets also started correcting a little bit. But, as people like Ed Yardeni, etc., in the morning told us, maybe growth fears in the US are exaggerated. There was a very harsh winter in January. There's a lot of pre-buying before tariffs take hold. So imports rose very sharply. So actually, US economy should be fine, at least that's the expectation. What's your sense? Anything worth buying there in the IT services space? Stocks themselves sold off 8-10% last week.
No, so Prashant, I think the simple explanation is IT within India hadn't fallen off. So it was bound to kind of join the bandwagon. It did towards the latter half of February. But my sense is the revival will still be some time away because there's absolutely nothing in terms of new contract wins that have come in for any of the large names, right? So in fact, the mid-size IT names will probably be beaten down even more. So I would stay away. There's a lot of money allocated towards Chinese IT businesses that probably will go away, and the FI money will take time for most of the buying in India to happen. So I'm still not very positive on IT. Is the short answer.
No, I think point taken. I would have asked you whether if the 10% tariffs on China take hold, are there any specific sectors but that's, all that is for a normal market, which is responding to headlines one way or the other, more two-way market. This is a one-way market, and it has been that way for a while now. Prakash, thank you very much for joining us. Good speaking with you and getting that perspective. We'll speak again soon.